Oh, sorry. I on mute for the last first 3 minutes. So sorry for that. But I just want to say that we saw the setup on 4-hour time frame, right? Which is a total sub setup. Right? It's like a 4 breakdown. Right? We thought it was gonna break, but it do not. It will reverse from here. As long as it open above the last swing high right here, right, the key level right there, here, or this level right here, number 4 right there, then we have a total sub setup right there. Let's give it a try right there, and we enter on the 1 minute time frame right there. Okay, let do write some verbiage right here, and then we'll go from there, right? Total sub like, right? I have to put like right now because not exactly, because we just learn it, so we try to practice it. So a lot of revision gonna be happen. So just ease in our mind. We can say put long setup, right? Entry when it's open above 422.29, because last is the last swing low, right? Prior swing low level right there, and entry on M1 at 9:33. Okay, let's see how it's play out. Right, we practice right now. Let's see what opportunity that markets bring to us. We just treat every trade is an opportunity for us. Either opportunity to get profit now, or an opportunity to get profit later. If we're not winning right now, that means we learn a lesson and we will get a profit, next trade later. So that's the mindset we need to have. Okay, so we go along at 9:33 this candle, right? So we are in good shape right there. By the way, our target gonna be 226. I mean 4226. So our target gonna be here. Yes, this level. You see this auto block right there, right? That's our level right there. We exit when it reach this level, okay? But let me want to see. So let's look at the total sub setup, so we are on the same page. Hold on, I need to move it out of the way because I want this look. We want to recording the 1 minute time frame, and as soon as I have this ready, I will show you. But we want to look at. By the way, I have a many monitor open, so I can look them. But when I do the recording, it's only one screen, so I have to overlap them. But for me, I have many monitors open at the same time. Yeah. Look at the Photoshop. Photoshop setup. So basically, it make a new aftermarket 4. Yeah, I think we have a total sub setup on the one time frame. By the way, today is October 4, 2023. It's a Wednesday. So we are about four minutes from the news at 9:45. So let's see how it reacts to the PMI data release right here. By the way, for the first 3 minutes of this video, it's silent because I forgot to turn on microphone, to let you know. So basically, we have the PMI, right? PMI is the Purchase Manager Index. It's similar to the CPI, but it's for the supply side, and the CPI is for the consumer side. So in the economy, you need both sides for the economy to work, right? You need the end consumer, and you need the supply, the manufacturer, the services provider. So that's the idea. Well, let's see if our idea about the when we get in here, so what our idea of a stop loss, right? The stop loss is below this, 22.5 cents below this. So our stop loss gonna be 29. 5 cents is 24. Okay, if it hit, we go out. No question asked. Okay, that's our stop loss. So if it hit that level, we out, my friend. But we see the buy side liquidity were okay, so it's the uptrend, right? Uptrend, then you want this. Okay, so is this a market structure shift or something else? Right, you uptrend, you don't want this low to break it, and it break that low. Let's see how it handle after it break the low. It intermediately reverse, and then it check the buy side liquidity from here. See that? Maybe it gonna retest here and then resume the uptrend. Let's see. Wow, but if you look right there, you can see, wow, with the source setup, if you want to see that. Source setup on the 1 hour time frame. Yeah, I think the source setup. Yeah, it tell you the market structure shift right here, and then it rate the buy side, it's gonna come down. So let's see. By the way, we're still in the long trade because our stop loss right here. Let's see, okay. Oh, it may hit it. Oh, okay. Let's see. Yeah, we got stop out right there, my friend. Let's take a screenshot of that. Okay, so we got stop out at 9:46. Stop out. Let's see. We're gonna review this trade and try to improve this. It's a practice trade because we know that we're gonna to practice this trade. So no harm at all. $49, $46. So you see the level at 422.29 is very key level, right? It go back and retest the level and go up. Let's see. So the low of this candle is 40.31. So 31, so 12 cents below this. We are only 5 cents, so we got to stop out right away. So let's see. Okay, let's see. So the level right here is a fair value gap after a sell-off yesterday. So if you look at the 1 hour time frame, right, you can see that it's the bearish breaker right here, and it's the huge displacement and failure gap right there. So it's a unicorn setup right there. When it go in and retest the failure gap, you can short them. So that's the unicorn setup. In the 1 hour time frame is a short setup. It's a really unicorn setup right there. You see it just buy seller query, read it right there. Wow, look at that. Okay, let's take a screenshot of this to see it's come out. It's a short setup, right? And we have a bearish breaker right here, right? It's a swing low, and then you see the huge breakdown and failure gap, and then retest the failure gap. So we can say bearish breaker, failure gap, retest, and this is a unicorn. That is the ICT lexicon right there, ICT terminology, right? So basically, if you see a swing low and you see a huge displacement, break that down, then when it retests that error, the favorable gap or the breaker, in this case is the bearish, so it's a bearish breaker, but in vice versa, when it go up, then it could create a bullish breaker. Understand? Yeah, like right here you have a bullish breaker right here, swing high, right? Favorable gap right here, right? So it retest, boom, it go up. So that's the idea right there. And if this setup, then the target is going to be at least this bullish breaker right here, going to retest this. So let's see. So basically you have a bearish breaker right here, and this is the favorable gap, and here's your entry to go short when it retests that area. Look right. Okay, let's go back to 1 hour and 1 minute. Wow, look at that. So it's, you still have, if you entry right here, what the, wow, what is the rationale that we entry right here? We don't have it. Okay, we can't see it right now. We don't see it right now. So yeah, so right here it may give you some idea. It's like, okay, break market structure shift, so you can short them, but right here it did not break this order block. At least this order block, it did not break it. It make a high low. Then you can then mark this high, right? Wow, this is beautiful and set up for turtle sub right there. Let play out. Let do it. All right. Okay. Yeah, in order to this, you have to go down here. Yes, so it's not really candidate for turtle sub at all. It is to break the new low right here. Okay, so we already passed that 945, right? Where's the 945? Completely forgot about it. 40, maybe it don't have any impact. Yeah, around here we don't see the huge, whipsaw move at all. So then let's take a look at the news to say anything about the PMI. Okay, so the PMI for September is okay, so it's above the estimate, right? That's the relief right there. Okay, the IDP non-farm chain estimate, so that means the employment is way below the estimate number, like half, 50%. Wow, that's a huge drop. Okay, it looks like a very Negative. Let's see. Remember, the market is rally on the bad news to let you know. Oh, so the market bottom on the bad news. Yeah, bad news. And top on the good news. My voice kind of a little bit cracky this morning. Just let you know. I will try my best. So what is... Okay, so take the buy sell liquid from here. It make a market structure shape. What do I see? Oh, how about right here? Give it a short setup right here. The swing high. Yeah, look for 5-minute time frame. You can see that. Yeah. See that? Oh my goodness. It's a good short. Yeah, look at 5-minute time frame, you could see it. Wow, I think it's good short, going and short. Wow. Ooh. You see, it's supposed to... Wow, look at that. Okay, let me move this out of the way a little bit hard to see right now. So let's move this guy out of the way a little bit, okay. Okay, just right here. Okay. So yeah, look at the 5-minute time frame. It's a short setup. You know what to do with this? We want to see. Okay. What time? 04 8:45. Okay, I'm working on the different screen right now. I want to show you later, but I want to record the movement on a 1 hour time frame. I mean 1 minute time frame. So to leave it there. I want to show you later something I'm working on in the background. So the time today is 4 and is that 45? No, it's 8:45. Okay. Yeah, oh wow, look at that. Yeah, so that means on the 1 hour time frame we saw is right, and our target gonna be below that. But also we're working on the 5-minute time frame right here. So the look back at what candle? 1 4. Wow, huge job right there. One, 4, 7, 7. I think we have the setup for the turtle soup. Let me look again. Okay, so I think we have the setup for the turtle soup on the 5-minute time frame. Okay, let do this. Right. Here a 5-minute time frame. Okay, let me make it a little bit bigger. So basically we have the high, right? The most recent high right here. For 23, 28. Yeah, 29. Let's fit that 28 right there. So this is the new high, right? For the last 20 candles, that's the new lit high. Okay, and it looked like gonna break. It's gonna be a so-called breakout, right? But it's a fall breakout, which is we apply the total soup right there. Okay, how we know it's fall breakout right there? Okay, look at the total soup setup say right here. So today it make a new 20 low. The lower the better. Okay, so in this case it's high, right? It's 10. It's a 20 bar, right? When you go backward, you count backward. It's a new high. Okay. Here's for buy, and we are short, so it's the reverse. So we have to do the reverse. And then the previous 20 bar low must be occur at least 4 trading section earlier. In this case, it's 4 candle, at least 4 candle. And it's very important because the one is create the so-called the double top pattern right there. It's a double top pattern, and that exactly happened. All right. So how many section? How many candle between these two swing high? 1, 2, 3, 4, 5, 6. So it's more than 4. They require at least 4, right? Look at that. So they want at least 4, but we have more than 4. You see that? Yeah, we have more than 4. Then as soon as this candle open below this level and then it's ready to buy side, then you get ready a short. When the next candle coming and it's open below this high, then you short right away. Understand? That's it. The very basic trade for, so the total sub is a very simple trade. It's not complicated at all. We have to recognize the pattern. So that right here that we have the total sub is pretty much like a double top pattern right there. Yeah, you make sure that you have swing high. Alright, swing high. And whether or not you want to see the market structure break to the downside. And this double top is created perfect total sub right there. Alright, let lock this trade first. I mean, in terms of the ICT concept, you can treat this as a what? Auto block, alright, and then the displacement, market structure shift, and this is a retest right there. Yeah, but here we have the total sub setup, confluent with the ICT, then that will give you a high quality setup right there. Okay, so let's keep this in perspective right here. So the target maybe go and retest the London high right here, right? So here we have the total sub setup, exactly the total sub. It no longer a total sub like we call it, because we're not sure, but here we go line by line with the textbook. It's a thick, perfect total sub setup right there. In this case, short setup, right? Remember, it is a 4 breakout setup, and also another name right is called double top, right? Another name for this called double top pattern right there. That's the whole idea. In order to help you understand better, then you can use the double top. It's easy to understand, but basically the idea right there. So we mark out the 20 bar, the swing high, and we watch for it to retracement, make the market structure shift right there, and then when it go and open and retest that this level, and you see it's closed below that, then the next candle is open below, then go in and short them. So basically we go short when it's open, wait for it open below, okay? Open below. In this case, for 23.28, what you call this level? All right, I want to give some verbiage on this, so hold on. We can move down here so we have more space to talk. More space for the verbiage, right? Below. Below the prior, or they call in the textbook they call a previous 20 bar. 20 candle, right? In this case, with 20 candle high. That's which is 23.28 right there. As soon as you saw it's open below, short right away. And another thing we have in this setup is that we see the market structure shift right here. It gives a signal that it's gonna go down. Market structure shift right there. See that? Yeah, I'm sure right here. Okay, so our entry time is 0940. Give me just a second. Right, and okay, and our stop loss is 5 cents be above this level. Okay, stop loss is 5 cents above of the target level, right? In this case, which is above for 23, 28. Okay, and if you look at ICT concept, you still have the setup right here for the ICT concept. It's a auto block, right? This guy is auto block right there, and this is a retest. Auto blocks, favorable gap displacement, market structure shift, right? So we have a confluence right there. You don't see much the favorable gap much, but it's the so-called implied favorable gap right there. It's not really so strong. We want is a huge favorable gap. So, but anyway. And we do have a market structure shift, right? Yep. Okay. Let go first. Let go first for now. Oh yeah, what our target? Oh, go to it's the London high right here. Okay. Let's see. Now we have a real, total subset up right here. So for today, yesterday, and today we start, incorporate the total subset up, so that we have it better to read the, identify the pattern and liquidity run, help us to have a better entry, better execution, better target. So the more we practice, the better we are to recognize the pattern. Right, let's see. So our target is at least this level right here, 420, which is London high right there. Let's see if we reach that target. Okay. So what we go in for, hold on, what the entry time? So entry time is right here, 940. Okay, so where is 940? Right here? Yes, as soon as you see it open below that, you see, even though this one is open below, but it tried to take the buy side, and then the next candle, as soon as you saw it's open below, go in 40 right there. Wow, beautiful. Oh, I see. Yeah, on the 1 minute you still have the double top pattern right there. Yeah, you can say right here to help us understand better, just say turtle soup, right? Short setup, and it's a double top, so it's entry on and exactly 9:09:40 right there. Here the double top right here. I mean, in the 5 minute we see better, but also right here you see double top right there. Yes, and also you see the microstructure shape right here. That means it gives you some idea right there. I mean, give you the signal that you should go short. Okay, let's see if it reached the 20 level or not. What do you see from here? Yeah, I see the sell side liquidity will drop, so it may go down. So we see, wow, very interesting, right? You see it's a buy side liquidity word trap, and you have a sell side liquidity word trap also. So what you call this is called volatility collapse pattern. I think one of the guy, I forgot, Martini something, come up with this name. Right, basically they say this pattern, they call this pattern is because it's shrink, right? You see it shrink from, it drop buy side liquidity, right? Buy side liquidity drop, and also sell side liquidity will drop, right? And this pattern they call volatility, right? Volatile, right? Volatility collapse, right? Collapse. Yeah, I mean I can double check on the spelling. Pattern, or they call VCB. Okay, so that's an idea right there. Let's monitor this phenomenon. You see, let's see how the liquidity run from here. Oh, so it's gonna wrap the sell side. So because right here we have to whether we stay in the trade or we wait for our target. So in this case, the market tells us to stay in the trade, I guess, because it's gonna take the sell side liquidity. Let's see. we try not to impose force or impose our buyer on the market. We just listen to the market. That's it. Well, so the market tell us that is gonna move out to our target, which is 420. Let's see, if we hit our target 420, we out for the trade. So basically we in right here and then we out right there. Beautiful. Let's see. Come on. Yes. So we out, my friend. That's it. We can leave the money on the table. Who cares? But we reach our target, then we out. So whenever we see the one leg moved out and we see this pattern, VCB or volatilities clap pattern, then we know that it's gonna make another leg down right there. Okay, so targets got hit, target for 2087 got hit at 1024. So that's it, my friend. It's the first time we practice successfully a turtle sub short setup trade right there. We see the setup on a 5-minute time frame and we entry on a 1-minute time frame. For 2087, you see, beautiful. You see, if you don't get out, then you feel a little bit discomfort right there. $10.24. Beautiful. 124. See that? Oh man. We sweat our pen now if we don't get out. Not really, you know, we can move our stop loss down here, right, to lock in our profits. How about the 1 hour time frame? You remember we took the short on 1 hour time frame? Yeah, but it not reach our target yet. Right, here's the 1 hour time frame. If we follow the 1 hour time frame, then we still stay in the trade. Yeah, you may execute a trade right here because we want to go all the way here, out of block, but sometimes it's not. The most conservative target is gonna be the fair value gap. You see the fair value gap between these two candles. So when it hit that spot, then you may need to exit or reduce, scale out your position. That's what we do right there. This is the London, right? That's the London. Yeah, this is the London low. The London on the pre-markets. Yeah, you see this auto block right there? So the conservative target is when it takes retest this auto block, you can get out if you want to scale your profits. But if you want to be aggressive, then wait until it reaches all the way to this level right here. What the level of this one? The high for 1993, for 1993, 97, 4 more cents down at 93. Yeah, so your target gonna be 93 for 1993 if you aggressive, if you want to take more risks, so you can get more. Hold on, I'm sorry, it should be the high of this for 1993. Yeah, that way. So that's the target when we short right here, right? Is a bearish breaker, huge displacement failure gap, and this is the retest and this failure gap, so we can take a short trade. Well, the reason we go short because right here, when we go here, we see a rejection right there, and the next candle is also the same, have rejection, so we can go short on around 10, right? Yeah, as soon as you saw this, take the buy side, and it just open right below this high, then you know that it's a short setup. We know that's short setup. Yeah, that means if we go with the high time frame, we're still in the trade. So in the future, reference for us, when we see the pattern, it drop the buy side, drop the sell side, and the trend is going down, then it's gonna go down. Just follow the trend. Well, that's the huge rebound right there. Let's see. So 10:30 now. So let's look. See on the 5 minute. Well, so it's our very first total sub practice play out very well right there. So we hit our target and we get out. We see it rebound right now. So if we look at the 5 minute time frame, we see the DR model, right? It's the implied DR low, implied DR high right here, and it's the mixed range. Let's see. By the way, the total sub we identify on 5 minute time frame right here because it's a double top. It's much easy to see on the 5 minutes on than on the 1 minute. And the beautiful thing right here, we have another confluence right here, is that the market structure shift. You see, it take out the low, because when the market moving up, you pay attention to the low, because the low is the one that keep the trend, right? As soon as that low break, then you know that there's some change, market structure shift right there. Then it go to test the last 20 candle high right there, and as soon as you see it take the buy side and it close below that, and the next candle is close below and go in and short right away. So right away, without any hesitation or procrastination at all. We see it today with our own eye. And the target will be the London high right here. So let's see how much we gain on this trade. Beautiful. Yeah, let's say we're going around here. Wow, look at that. So beautiful. $2. And how much you reach for this trade? Man, don't worry, we're getting better. We will take this trade in the future. We practice right now to be patient with ourselves, then we'll have a bright future ahead. So don't feel missing out. because the market is always there, and it's always provides endless, opportunity of easy trade, easy money. To keep that in our mind, then we will eliminate all the fear of missing out. That is our problem that we're working on to improve. It's not about that about opportunity. Opportunity is always there. The problem for it that we have to remove that feeling, the feeling of fear of missing out. As soon as we remove that, then our trade will be significantly improved. Okay, so take a screenshot of this. Hold on. So let's say we got our trade at this level, right? 1020. We're going at 940, right? And 1020. Only how many minutes? 40 minutes. And you get a $2.23. And if you scale that, it will be $20,000 right there. So for this trade, the risk reward ratio is 0.30 cents, right? And you get $2.23. So what is the risk reward right here? So basically 1 to what? So 32, $20. So let's say if I want to, 7, right? 1 to 7. Because 3 times 7 is 21, right? So that's our risk reward ratio right there. Beautiful. Look at that risk reward ratio, my friend. That's how we make decision. We don't make the decision based on certainty, right? Because there's no certainty in trading. We make decision based on probability. What the risk, what the reward. Then go for it. Don't hesitate it. When I set up, so up, do it. Wow, you see the huge huge retracement from here. But let's see. It's too early to say anything right now. But anyway, we see right here the DR model form right here. You have a DR low and DR high right there. So we don't have the signal yet for DR because it needs to be close, one candle close below the DR low or above the high in order to have a signal. So right now it's still play around the mid range. But anyway, the time is up. Thank you for your time and tricks. Talk to you later. Bye for now.